All right, welcome everybody. Just testing out the system here, see if it works, see if my audio visual is good. We're looking at the 4-hour chart of NASDAQ futures, the mini NASDAQ futures, symbol MNQ1 exclamation mark. This is the 4-hour chart. So one thing to notice here, each candle is 4 hours worth of time, price action. So something like this, where we have support formed here, you'd want to connect these areas like that. So we want to be aware of that upward trend line. We're in an upward trend, and that's something to note. And you can see here, okay, this is something to keep in mind. You have resistance right here. Resistance that was broken. So right here, this area, we want to be mindful. We want to be mindful of this area. We want to be watchful and to see if we may get a bounce in that area, bounce up. So basically, we're testing that area. We're going to be testing. It was tested once, and when it gets tested again, what's going to happen? We want to see what's going to happen there. Okay, so we have an upward trend line plus a resistance zone that was broken, and now it's being retested. So this type of area, this would typically be a good zone to definitely, look for higher highs or look for a bounce here. So we're going to zoom into the 10-minute chart. This is the NASDAQ futures. So essentially, this is, generally speaking, the stock market. Tech stocks. So we go into the 10-minute chart. We're on a 4-hour chart right now, but let's go into the 10-minute. See what we got. Okay. So we're getting a green candle. We're getting a bounce. Doesn't mean anything, though. So let's just take a look at where there would have been a potential trade this morning if we were trading. So if we were trading this morning, right here, let's look at the 9:30 candle. Right here, this is the 9:30 candle. It closed. It would have been hard to pick a trade this morning based off of what we saw on the 9:30 candle close. That's okay. But right now, there's nothing. There's no trade. What could have been a good trade here, let's see. Let's look at this. So if you were awake at 3 o'clock in the morning, okay, right here, you see we have structure. There's it. See that? Structure. And the trigger candle, okay, this trigger candle right here, this is a trigger candle. See this candle right here? This is an engulfing candle. Okay, so if you were awake at 3 a.m. this morning, most people wouldn't, but if you were, you could have said, okay, here's my structure, here's my trigger candle, and here, right around this area, it's my target. Okay, so this trade could have taken a break of this high of the trigger candle. You could have had a target up there and a stop loss at the base of the trigger candle right here. That would have been a good trade. But I'm not on the markets 24/7. I don't like to sit at the computer all day and night. That's just not what I do. So it is what it is. So this trade, this would have been a 1 to 5, you know, almost a 1 to 5. So you're risking $1 to make $5, or risking 100 to make 500 in that trade. So that was that. So this trade, so that just played out. You had pressure building, 1, 2, 3 wave count, pressure release, and then now we have our pressure release phase. See this big red shoot down? This is pressure release. So it's an impulsive move down. We don't have enough information to take a trade at all. Essentially what we got to do here is expect continuation down, maybe, or continuation, you know, or structure to form and continuation up. So what I'm essentially looking for, you know, we're gonna wait another 24 hours. Maybe we'll take a trade tomorrow morning. But essentially what we'd be doing here is we would wait. So we got an impulsive move down, and so what we want to do and see if a bear flag forms here. So if this goes 1, 2, 3, and then an engulfing trigger candle right here, we're definitely going to be looking for a short at a break of the low of that trigger candle. And we're going to take it all the way down into that green zone. So if that happens, we'll be doing that. And this is the case, and I'll make a case for the upside now. The case for the upside is if we basically get a tweezer to form here. If this happens, like something up like this, and then we get a bull flag like this, and we get 1, 2, 3, and then some sort of engulfing bullish candle right here, then we will be entering a long position and you know, aim up here with a stop loss probably around there, and we'll be doing that. So for now, there's really no trade, and that's just how it is sometimes. You just sit and wait. But typically I'll be here in the morning time during the New York session, so around 9 o'clock a.m. Eastern time zone to 11 a.m. Eastern time zone. I'll be watchful of the markets here. Let's just spend a few moments. Okay, so this would be day trading. So let's just spend a few moments covering some of these stocks that I have in focus. I just want to go over 2 of them. UPS. So it's interesting how I've been kind of recommending this for educational purposes only, recommending it as a buy. And then on the news the other day, we see a UPS plane crash and burn. It's like, oh my gosh. So that could be, you know, people could interpret that if we want to take a spiritual look at all this. Hey, it's resistance. We're on the right track. Maybe. But essentially what you have here is, see, with UPS, I suspect, and I've heard that UPS might be getting bought out. I don't know for certain, but it could be. And it could be getting bought out by you-know-who. Now, UPS, this is a daily chart of UPS, okay? Look at how it's just been getting hammered since 2021. It was up at $220 a share. I was buying it down here at $99. And if UPS gets bought out if somebody announces, hey, we're going to buy UPS, this could go in one day. It could just jump all the way up to this. It could be crazy. And this could happen. And all of a sudden, the stock that was at $88, $90, now it's at $280. The company could get bought out. And they're like, yeah, we're going to pay $250 a share. Maybe. Could be happening. Could happen. You want to look at this structure here. See this? This is kind of like a bullish channel. Something to consider. So when you have structure like that, be prepared, because this is where your horsepower comes from. The power of the trade comes from a structure. Okay, now what we're getting here is we're kind of just waiting for some sort of catalyst to happen. I think it's going to get bought out. I think UPS is going to get bought out. In the meantime, it has a great dividend. It's positive earnings. I did a ChatGPT search. A lot of the employees, unfortunately, aren't happy with the internal operations, but I have faith that things will turn around. I like the fact that they have nice brown trucks. It's like camouflage. And here's a zone you want to keep in mind. If UPS gets down to $88, $89, I would be buying it for sure. Educational purposes only. But you can see how this zone right here, see this? It's resistance. See, we had resistance. It sold off, sold off, sold off, sold off. Then resistance got broken. Resistance was broken. Okay. And now we're sort of waiting for the retest. So if you got some sort of flag here, it goes 1, 2, 3. This, you want to kind of look for something like that on UPS. But I would, for educational purposes only, I would think it's a good buy right now, but maybe not. So that's one that I have in our portfolio. I haven't fully committed. We do have some of this stock in our church portfolio, but not all of it. And then another company here, Hafnia Shipping, which I learned about through just being a member on TikTok. You sort of sign up to these social media accounts, start to learn things, and see what happens. Somebody recommended this company, and it seems totally legitimate with good earnings. It's a company, it's an employee-owned company. Looks like they're about to announce earnings, and earnings are looking a little higher than last quarter, which is good. Earnings have been 13 cents, 15 cents, and now they're going to announce earnings at 19 cents coming up on December 1st, which is exciting. And this is an employee-owned company. Somebody's calling me. Goodbye. And I was buying it down here at the $4 range here. Now I'm still holding it. And now it's basically went up 50 or so percent. It's at around, I was buying it at around $4, $4.20. Now it's at around $6, $6.20. We've got a green day today. It's in an uptrend. Here's your uptrend. It's bouncing off the line. So we've got a good target up here. It probably wants to hit this level right here for sure. It wants to go to $7. So expect Hafnia, HAFN, to probably go to $7. Something good to consider here is look, so this company, it was put on the market on April 2024. And if you look at this area right here, this sort of topping tail, see this green at the top? This is an indication, this is evidence of, supportive upward movement. If the price goes up into this level and starts hitting that price action to the left, it's all green wicks at the top, it's going to have no problem continuing upward. So over the long term, you could see Hafnia, this could go above $10, no problem. Educational purposes only. So this is, just something to consider. Hafnia has a great little story on Instagram, something to look at and study. I believe in the company. It's employee owned. They ship chemicals. The employees literally own the cargo ships, which transport chemicals. It's a Norwegian company. So it seems like a smart investment, but it's up to you. So those are two stocks I just wanted to cover for educational purposes. And we could just go back to the NASDAQ chart here and just zoom into the 10-minute time frame and see what we got. I would expect, typically I definitely like to be long the markets most of the time. And you could probably expect an upward move here, but it's just the data isn't there. We made this big downward move. We had an impulsive downward move, pressure release phase, and you sort of need to have pressure build. So we got pressure release, and we're going to expect pressure to build, like this, maybe make a little thing here. And then we're going to look for another pressure release. Maybe, let's see, later this evening or tomorrow morning. So it's basically what we're just waiting for. And there's no action to take right now that is reasonable. So I hope that helped everybody. If you're tuning in to sort of learn the markets a little bit more, we can stay in touch with these markets. Let's just go over gold really quick on the 10-minute time frame. So if we go to gold here on the daily time frame, every candle is a day's worth of price action. So I was definitely not going to get in front of gold. When it was at $3,000 an ounce down here, I was buying it, loading up. I was like, there's no way I'm getting in front of gold and just going to say, well, it's done going up. No way. So all my gold at $3,000 an ounce is now worth $4,000 an ounce. Wow, congratulations, whatever. And right here, it could be, we could just got to stay watchful and see what could happen. It could continue to go up higher. I would expect gold to probably basically just sort of consolidate here, make something like this, 1, 2, 3, and then maybe higher. But I could be wrong. If it does go down, we would want to see it go down to, something like this level right here. I'd back down around $3,500 an ounce and sort of bounce from there. But we'll see. In the meantime, gold's a great investment. Silver is great. It's useful. These computer chips, all of them need gold. Electric cars need silver. It's a useful industrial metal. I don't see the problem in holding some of it. So we'll just have to see what happens. And that's good coverage of the markets for today. I think we're going to cut it right there. And I will be back on tomorrow morning at around 9 o'clock a.m. Eastern time zone. Okay, thank you for your time.